In Stacking Up today, Bret Rosenthal, Bubba Trading, joins me now to talk about a couple of stocks, including Bank of America. And you say the banks have you baffled, and I think of a lot of other traders out there as well, Bret.
Yeah, absolutely. You know, another bank beat on earnings, Bank of America. They had earnings last week. They beat by 3 cents, reporting 29 cents instead of 26 cents. They're trading it below a 10 PE, while the general S&P 500 is above 20 PE. S&P's dropped 8% this year. These bank stocks have dropped, 8% down to 19%.
Huge move.
I don't understand why they're slamming the banks, but then when I think about it, maybe people are nervous. In 2008, that's what hurt them the most. Some people are holding this stock from 55 before the crisis, and I think people are cautious and they want to get out of their bank stocks if we're going into another, bear market, which I don't think we are.
Do you think Bank of America is due for a bounce?
Absolutely. I'm looking to the next earnings when they're going to beat again, and I'm looking to get long the April 14 strikes for 60 cents, keeping it very simple. That way we're at $13.60 right now. If we rally $1 in the next 81 days, I get to break even. 15 days ago at the beginning of the year, this stock was at $17. So if we can go from here to 17, risking 60 to make $3 sounds pretty good to me.
And you have until April to make that trade
Absolutely.
work out. Let's talk about the biotechs too, because this has been another baffling area for traders. Now we all remember the Hillary Clinton sell-off in biotechs, but ever since then we've really been bouncing around here. Now you're watching a basket of biotech stocks.
Absolutely.
Why is that?
This basket has over 190 different components, and that's because when you try to pick, this company's going to cure this over that, you never know what you're going to get involved with. You get involved with the KBIO, have to deal with the CEO like that.
Biotechs are just as hard to trade as the banks right now, because biotechs, anything can happen.
You have no idea what's really going on behind that company with their research, with their funding, what's going to happen next. It is a big gamble to just say this one over that one. And so all I know is, every year, this index maybe pulls down once or twice. And if you look at the average returns, 5, 10, 30 years out, always going up overall. And so trend is your friend. I'm using this pullback at the end of last year and this pullback in the beginning of this year to get long this stock. We traded
IBB is a basket of
NASDAQ Biotech Index.
And you want to go long because you think this is going to go higher?
Yeah, we're not getting short healthcare, I hope. I hope we're not going to stop continuing funding research and trying to cure diseases and getting healthier. Otherwise, we won't be here to talk markets.
Now, you are basically putting out a put play that could mean that maybe IBB gets put to you at 265, but you're comfortable with IBB at 265 because you think it will go higher.
Right. I want to take advantage of that volatility that we're seeing even all the way out to the January 2017, a year out. I'm giving this whole market a year to figure out that, whoa, this index is way too low. So we traded 268 last week. We've rallied $20 up to 288. We traded as high as 400 last year. I'm selling the 265 put spread, collect $26, and I'm buying the 335 call spread for $16. This way I get a credit of $10. I get paid to potentially have to take the stock at 265, or I'll get long from 325. I hope we go back to 400.
It dawns on me your plays really could be predicated on what happens with the election as well, Bret.
Absolutely. Same with both, financials or the biotechs. Maybe that's why they're getting hit.